Coming up on Market to Market, revised definitions again for WOTUS, using AI to help battle food insecurity. As Congress returns to Washington, crop insurance comes back into focus. And market analysis with John Roach, next.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next, because at Pioneer, our name is our mission.
Sukup Manufacturing, celebrating 60 years of innovation as a family-owned and operated manufacturer of grain storage, drying, and handling equipment out of Sheffield, Iowa. Learn more at sukup.com.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, September 1st edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Resiliency remains the word on job creation in the United States, despite factors like higher interest rates. Friday's employment report revealed 187,000 jobs were created in August, a moderate pace compared to the previous 2 years of growth. The unemployment rate ticked higher to 3.8%, the highest level since February of 2022, but still historically low. Around 736,000 people began looking for work last month, the most since January. The PCE index, the Federal Reserve's preferred gauge of inflation, had a 0.2% growth, making for 3 consecutive months of moderate gains. The Supreme Court may be out of session, but their rulings are still in season, and the ramifications are being navigated. This week, the EPA again released rules for their latest draft of WOTUS. One word becomes key in the new direction set forth: navigable. Peter Tubbs explains why.
Unpermitted development will be allowed in many wetland areas across the country under details released by the Environmental Protection Agency this week. The new rule revises the Biden administration's Waters of the U.S., or WOTUS definition, which was struck down by the Supreme Court in May in Sackett versus EPA. The previous rule had expanded Clean Water Act protections to wetlands and waterways. The new rule removes the significant nexus standard, which allowed protection to wetlands if there was a connection between a wetland and a waterway that allowed water to flow between the bodies of water. The new language states wetlands protected by the Clean Water Act must have a continuous surface connection to a navigable waterway in accordance with the Sackett ruling. Proponents of limiting the reach of the Clean Water Act believe that the federal law doesn't properly respect the rights of property owners. Conservationists argue that the new rule will leave thousands of wetlands across the country vulnerable to pollution and removal without penalty. While many wetlands will no longer be under the scope of the Clean Water Act, they may still be protected by state rules. For Market to Market, I'm Peter Tubbs.
The use of artificial intelligence is in our daily lives, whether we like it or not. Harnessing its powers for good and not evil will be the greatest challenge of our generation. Another area where AI may have a use beyond enhancing television stories or college term papers is supply and demand. David Miller explains.
The problem of food insecurity may have another ally: artificial intelligence.
So in these problems, these are matching problems. You're trying to match a donor with a recipient, right? So there's many things you can think of this way.
Once the issue of efficiency is solved, then the problem of fairness in distribution comes into play. AI could also assist in making sure food is used and not wasted due to logistical constraints.
The current system is a person is making these matching decisions, and we just want to automate it. And in doing so, we want to ensure that we're doing the right decisions, like in a sense of like people are not driving a lot, the food is going to people who want the food and can use the food, but also at the same time, we are being fair.
The technology could further be employed to make connections between the locations and amounts of surplus food by helping to choose where the food is needed the most.
The other thing is now you can scale. Now you can just go beyond Indiana. You can include more food banks. You can include processed donations a lot faster, because a human doesn't have to sit around trying to call people on the phone and so on.
For Market to Market, I'm David Miller.
The next Margin Protection Plan enrollment deadline is at the end of this month. The current Farm Bill is set to expire at the end of this year. Crop insurance has become a tool for producers where government programs gap, and also has been a big part of hearings for the next Farm Bill. Tony Jacina has spent his career in the crop insurance industry with Farm Credit Services of America. His job is helping farmers and ranchers understand the relationship between crop insurance and the Farm Bill. Our conversation is part of the next MTOM podcast, and a portion of that chat is this week's cover story.
Actually, a little bit of both. The Farm Bill has made, enhancements. So there's, for example, back in 2014, that's when things like supplemental coverage option came out, or stacks for those that are kind of more in the South. Margin protection was started as a pilot. And so those are some things that came as a result of legislation through the Farm Bill. But they also have a process called a 508H process, which allows third parties to work with folks in the industry to create products that might fit, that RMA may adopt. And so we've seen as much usage of those types of third-party groups, the 508H submitters, if you will, to create products as well.
I realize this is probably a couple of steps above you, but where is Farm Credit Service as an industry that you're involved with? How close are you watching Farm Bill negotiations and offering suggestions of ways to make sure gaps are filled or improved?
Yes, Paul. It's very timely because we're going through that right now. The Farm Credit System and Farm Credit Services America, Frontier Farm Credit, we watch it very, very closely. Not only on a daily basis, but probably an hourly basis. We want to make sure we understand the parts of the Farm Bill that are being discussed, that, what are some ways to enhance it or improve it. So we offer suggestions. At the same time, there's a lot of things in there that are really great. We want to make sure that we work hard to protect those. For example, crop insurance is the only safety net we really have in the Farm Bill. So we want to make sure that we do all we can to protect this critical tool for risk management for producers. So we watch it very close.
Do you find there's still a political appetite for it?
Yes, there is. And we'll see that it's the only bipartisan bill that really exists in Congress anymore, where you can get both sides of the aisle to agree on legislation, which that's getting to become in short supply anymore as far as one side willing to work with the other. But the Farm Bill is one where you truly have bipartisan support.
And when you have hearings, field hearings are out there, I'm sure there's representatives of your industry as a whole that are paying attention. Are you hearing certain lines, pages, things are going to have any issue getting passed? I mean, are there sticking points? Are you part of a sticking point, do you think?
Yeah, there's a lot of different titles, obviously, to the Farm Bill. So there's a lot of discussion as far as each title, as far as what's working well and, ways to enhance it. But probably the things that you hear about the most I have to deal with, like the reference prices, that determine, for example, when you look at ARC and PLC, kind of the two federal programs as part of the Farm Bill, the reference prices, are those going to get adjusted or not? And so that's probably the biggest discussion right now. There's been a lot of discussion around some of the ad hoc, disaster payments, and is there a way to make some tweaks to the safety net, whether it's crop insurance or other areas, to maybe minimize some of that reliance on ad hoc programs and make something a little more reliable and a little more assurances for our producers.
Because the ad hoc items are the ones, to me, always seem the more political ones
Correct.
than the bipartisan ones.
Yeah, that is absolutely correct. When you look at just some of the recent ones, you have, wildfires and hurricanes, and, those are very specific and tragic, events that occur. But to get support for that, sometimes you've got to broaden the coalition and include maybe other elements or add things to the program or to the cost of that disaster to get enough votes to get it passed. And that's where sometimes you get some challenges, or it creates some challenges within the program to get things like that approved, and yet there's safety nets that are there if people take advantage of, like, for example, a good crop insurance program.
You mentioned those storms and hurricanes, wildfires. Those are all hot topics in the insurance industry as a whole, where you have companies not writing certain policies in certain states. How does that drift over as a potential to farmers and ranchers?
Yeah, Paul, a great question. And, a couple of those examples are Florida and California, where you are seeing on the property and casualty side, you're starting to see some, drawback, either reduction in coverage, or companies completely getting out of those markets. And so the impact that potentially could have for crop insurance, we keep a close eye on it, is the impact it has on reinsurance. And so while the federal programs like multi-peril crop insurance are fine, but it can start to impact things like some of your private products like hail and wind, because if the cost of reinsurance goes up, that cost gets borne across a broader market. If it can't be contained within, say, the property and casualty market, the reinsurers might be looking at having to raise rates on all types of reinsurance, just because that's where capital is moving, and that could have an impact on, again, some of the private product rating, if you will, or even availability.
The full discussion will be part of the MTOM release on Tuesday.
Next, the Market to Market Report.
Spec funds sales were too much to overcome in the trade this week as corn joined all three wheat markets suffering in more than just the heat. For the week, the nearby wheat contract lost 26 cents, while December corn subtracted 7 cents. The soybean complex benefited earlier in the week from hot and dry conditions while the crop faltered. The November contract sold off 19 cents on the week, and December meal fell $15.40 per ton. December cotton expanded by $2.64 per hundredweight. Over in the dairy parlor, October Class 3 milk futures added 27 cents. The livestock market was mixed. October cattle declined $1.03. October feeders gained 67 cents, and the October lean hog contract rallied by $3.22. In the currency markets, the U.S. dollar index added 18 ticks. October crude oil improved $5.73 per barrel. COMEX gold expanded $26.40 per ounce. And the Goldman Sachs Commodity Index increased just over 14 points to settle at $597.70. Joining us now, Senior Market Analyst John Roach. Hey, John.
Thanks, Paul.
Wheat, all three, tough times. If I keep looking at these lows and this trend, eventually we have to hit bottom, right? When's that going to happen?
Well, eventually we will. For sure we will. We've had a buy signal on wheat. I think we're up to 18 days now. So, we've already gone down into the technical support area where the market should find buyers. But what we're finding instead is speculative funds willing to sell and very few over on the buy side really willing to buy very much. Keep in mind that what we have going on in Ukraine and Russia, the biggest exporters of the world, are right now really having a difficult time being able to make any exports. Russia is restricted by most all of the peace-loving nations, and Ukraine has shipping problems. So if anybody buys from Russia or Ukraine, they're buying at a discount. And that's holding the whole world price level at a discount, in my opinion. And my hope is that we get past that. But at the moment, we don't have that on the horizon at all.
And those people that are buying from Russia are big buyers.
Oh, of course, but they're it's the Iran and China and others in the world that are willing to do business with whomever, regardless of what the U.S. says.
All right, let's talk domestic producers who are looking at a down market, looking at a dry conditions in their fields. You thinking changing any crop planning in the wheat belt in the United States right now for next year?
Perhaps. I mean, we may well see some people shift back away from wheat. We had some movement back into wheat this year. We could maybe see it move back out a little bit. We certainly did better in the hard red winter wheat area with some of the corn plantings than we did with the wheat. And so there's sure a possibility of that. But at the moment, I wouldn't look for any real big change in acreage.
Do you have a price target down?
No, I really don't. I never know. I mean, you know, the market funds will continue to sell and follow the trend. You know, the old adage, the trend is your friend, and we say that, but they literally do that. If the market's trending down, they're going to continue to sell until the buying overwhelms their selling. And I don't think that's very far away. And so we think this is a market to be buying in. As I said, we've had a buy signal on for coming up on 20 days. So these are places where you make purchase, but understand we don't really have a reason to turn and go higher tomorrow.
So we don't have a reason for people to go from one end of the boat to the other yet, which
well,
I've heard you say before.
The farmers are in the boat that they're holding on to inventory right now. Okay. And I think you just have to stay in that boat if that's your position as a wheat farmer.
Spec funds also controlling corn right now. Weather be darned. Is that right?
The corn market has another couple things going on. First of all, the open interest is not as big as normal. And so with a smaller open interest, you have to look at the players, and the users are not anxious to go out and buy a substantial amount of inventory until we get into harvest and they see a crop that's coming on, and so they're reluctant to buy. Farmers are in a position where they really don't want to sell anything, and those who've bought have already been stung with margin calls enough that they're not really coming in. And so the spec funds, even though they're not trading in huge volumes, it's enough to just put pressure on the market and hold it under pressure, and it's going to continue that way until the trend turns higher. Now, you ask about wheat. Are we making a bottom in wheat? I think we are making the bottom in corn. We had the Farm Progress Show in Illinois this week, and we've made the bottom several times during that time frame, because that's when the August 31st deferred pricing contracts or delayed pricing contracts, many of them got priced through this week because they came to their deadlines. And so that's about as big of a whoosh of inventory moving into the market that you're going to have until we finally get into harvest. And harvest is still a couple of weeks away. So I think corn market's bottoming here.
Well, okay, corn harvest about to start. In your area where you were at with the Farm Progress Show, that's an area we have heard is drier and harvest is starting. Did you see many machines in the field down there?
Didn't see any other than at the Farm Progress,
okay.
and what was reported to me, the field that they harvested right next to the at 195 bushels an acre. I talked to the farmer that his farm he was on, and he expected 200 when they went to the field. I think it was 87-day corn, so it was really so really those numbers are not as frightening as some as we've heard from other people. A lot of variability in the crop.
Well, you mentioned DP. I want to get a little detailed question. Bradley in Nebraska submitted this one this week, and always like to hear what Bradley has to say. He asks you, John, how much of this week's corn sell-off was managed money, and how much of it was commercial hedging, as farmers are forced to price DP contracts and have terms expiring at the end of August? Pretty much what you just said, right?
It's exactly right. And I'm not sure what percentage falls in each camp, but if you add the two of those two percentages together, that's going to be, I think, 90% of what got sold this week.
Okay, I want to go back to the harvest low, possibly, that's in, or the low. We've seen in the last 10 years rallies anywhere from, 30 cents to $1.30 after the harvest low comes in. Do you expect that to follow a pattern somewhere in there?
Well, I think the market will have some rally once we finally get the crop put away. But right now, what we're all waiting for are the first combines that go in the field. As you said, that it's going to start, because we want to see what their combine monitor says. We want to see what are those yields. And I talked to one farmer at Farm Property. He said, I think the needle's going to bounce from the far left to the far right on his farm. I mean, there's that much variability. And so we want to hear some numbers. And then once we hear some numbers, okay, now we'll be able to start looking out for it. There's a possibility we've heard enough of this crop that we've changed the fundamentals. That's the possibility. Is it real? I don't know. I'll know when I see combine monitors.
Will you know in beans that if this late heat has done damage to the bean crop?
In 2 or 3 weeks, we're going to start.
Same story.
Same story, because we just don't know. And when I would try to pin a farmer down and say, well, what do you think's really out there? I mean, they really just don't know. This is such an unusual growing season for so many people. And so it makes it really dicey. And the possibility here is we could change the fundamentals enough that we could have a much bigger market than we think we have with the current fundamentals. But bear in mind, again, where are you at in the canoe? And if you're a corn producer, now's not a time to sell. You've got crop insurance that you're protected. If it goes on down, your crop insurance will protect you. If it goes up, your crop insurance will shrink, but you'll end up basically the same number of dollars. The problem happens if you do something and you sell your crop, and then the price goes up and the insurance if the price goes up, it's not a problem. Let me start over here. If you sell your crop and then the price goes up, and then your insurance payment is less, and it doesn't cover. So your only thing you can do right now, if you're a farmer with corn, is be patient and wait a little bit.
With respect to beans, you had a sell signal on.
We had a sell signal on beans, yeah.
But do you see that what's going to get that signal back?
The sell signal?
Yeah.
We lost it.
Right.
So we're going to have some kind of concern on the supply side, or a continuation of better than expected demand to change the big numbers. If you look at the last USDA report, the world ending stocks on beans are the biggest they've ever been. And it's a huge, big increase compared to where we've been. Now, that's going to change according to the U.S. crop. It's going to change according to world usage. But at the moment, the forecast is big surpluses of beans coming. And so we've been relatively willing sellers on beans. Our recommendation has been to get half sold of your new crop. We started some time ago, but we've made more sales again this week.
In the livestock sector, there's some technical things that are flashing. In cattle specifically, it looks like there may be a bear trend starting to set in. Do you buy that?
We have sell signals. We're selling into it. We don't think really that the market's ready to fall apart. I can't point to things in the cattle market, the cash market, that are so frightening that I think we're ready to give up and start to go down. But we certainly have a difficult time moving much higher. I mean, we're in a sideways kind of a pattern here, and we're at very high price levels. And this could sure be the top at any time. But we really don't yet have those fundamentals put together. The cattle are very profitable coming out of the feedlot right now. People aren't holding them any longer. They just move them as quickly as they can get to those profit levels. And that keeps your supply under control. Our economy continues to kind of percolate along, so the high-priced steak restaurants are still full, but that could have a change out ahead too, depending on economic conditions. So there's some things out there to be concerned about, but we're not really saying that it's over yet. Be cautious if you're on the buy side of this thing, and keep your hedge protection in if you're putting cattle in a feedlot.
Well, yeah, the feeder then, that looked like maybe we've gone. Who knows how much longer that rally should have lasted. Just when you thought it was over, it rallied again.
It did again.
Where is that steam coming from in the feeder market then?
Well, it's called availability. I mean, when a cattle feeder takes cattle out of the feedlot that make $200 or $300 a head, it's awful hard not to go put more cattle into the feedlot. And particularly if you think this is going to be one of these peak markets, you just want to have cattle if that's the business that you're in. And so it's hard to not buy the feeders.
Hog-wise, what are you seeing there? Because again, it looks on a chart that the bear might be lurking.
Maybe, but the pork prices are too cheap. In my opinion, hog prices compared to beef prices compared to pork prices, they're too great of a variance there. And so we think the demand will start to pick back up, particularly if the economy starts to struggle a little bit in here. And remember, we still have a lot of people out there that are on the lower side of the economic scale, and beef is out of their budget completely, and pork is very competitive.
Always something to talk about with you, and we'll get your thoughts on cotton in Market Plus. So hold tight, John. Thank you.
Thanks, Paul.
Good to see you. We will keep John here for a minute because we're going to pause our analysis. We'll continue our discussion about these markets in our Market Plus segment. I have a number of questions ready from all of you. You can find both analysis and plus on our website of markettomarket.org. We do enjoy hearing from you, and here is how you can do that. Send an email to markettomarket@iowapbs.org. That inbox is available around the clock. Next week, we are going to look at how duck producers are hitting economic curveballs. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's next doesn't happen by chance. It happens when researchers and farmers work together to solve tomorrow's agronomic challenges. We're committed to creating what's next. Because at Pioneer, our name is our mission.
Sukup Manufacturing, celebrating 60 years of innovation as a family-owned and operated manufacturer of grain storage, drying, and handling equipment out of Sheffield, Iowa. Learn more at sukup.com.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.